back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Yatin, what have you done with your bull yesterday? The bulls have gone into hiding today, given the fact that the Nifty has, fallen below that 18,650 mark. In fact, RBI policy was, of course, unveiled today, and RBI has stuck to the script. No hike in repo rate. In fact, stance has also been maintained at withdrawal of accommodation. But what's disappointing was the fact that, RBI didn't really revise the growth forecast upwards, and even though there was a downward revision in inflation for FY24, inflation forecast for FY24, it was just by 10 basis points.
Yeah.
Even though for the first and second quarter, they have scaled down the inflation estimate below 5%, but they are extremely cautious when it comes to how this El Nino situation pans out and how the weather conditions pan out in the later part of the year, which is why RBI expects inflation to peak out somewhere around October or thereabouts. So the dovishness that the markets were expecting was missing from the RBI governor's tone. Maybe that's what led to some profit taking coming in on the Lal Street today. So the Nifty ending below that 18,650 mark. Sensex also down somewhere around 260 points or thereabouts. If you look at the advanced decline ratio, that was also in favor of declines today, 1:2 nearly. And among the top laggards, Realty index took a hit, 1.5% down. IT was the other pocket which was under pressure, but metals were holding out as a pocket. If you look at the top losers today, Grasim, Kotak Bank, Sun Pharma, Tech Mahindra and Apollo Hospitals, and among the gainers, NTPC, JSW Steel, ONGC, L&T, Power Grid and the likes. But what about the mid and small cap indices? They took a bigger hit when it comes to benchmark indices. Small cap index was down somewhere around 1% or thereabouts.
Yeah, almost 1% down, Nandita. But the key point here is that heavyweights were down, frontline stocks were down. If you look at the advance decline ratio, even today on NSE, it was 2:1. So, 2 advances and 1 decline, which would mean that the broader market was still holding out. Yes, there was selling, but largely it was frontline driven. Now, if you look at sectors, metal, energy were the two sectors shining in trade. But look at the gainers on the mid cap side. JBM Auto once again up 7%. Paytm up, almost 6% after Bank of America Merrill Lynch report, which has given out a target in excess of 800 rupees. APL Limited as well as Ether, both of these stocks up anywhere between 5 to 6%. What was not doing well in trade today was IEX. After there was a power ministry recommendation to CRC to change how really power prices are discovered. There was some concern regarding IES earnings because that could probably hamper the exchange volumes in the power segment. So yes, IEX on the back of the power minister recommendation changing the way how power price discovery happens, that stock was down 8.5%. Suzlon, after a 18-19% move yesterday, was down 8% today. Idea Cellular and HPCL were also the other stocks which are down 4-5%. And HPCL in particular, because CNBC TV18 report said that oil marketing companies are advised by the government to cut petrol diesel prices, and probably that impacted all of these stocks in trade.
Right. So, lots of movers and shakers when it comes to the mid-cap universe and even on the large-cap front. But let's also take a look at the stocks that are on our radar this afternoon. The first one is PB Fintech, a downgrade coming in from BofA Securities. From underperform to buy, target price cut to 600 rupees or thereabouts. The stock has done fairly well this year. But BofA Sec believes that the path to 1,000 crore rupee profit is something that is well known in the market and could already be priced in. In fact, it says that the company is good, but improving profitability is already priced in when you look at the stock. And at current levels, it's trading at somewhere around FY25 price to sales of 6x, which is versus 3x of Paytm. So any higher than expected competition from peers like Insurance Dekho could also throw a spanner in the works to its path to 1,000 crore rupee profits. But overall the stock has done well this year. And if you look at FII buying into the counter, they have increased their stake by 3% in the last quarter. So this downgrade has come in, but we'll have to see how competition pans out and whether or not the company is well on track to achieving that 1,000 crore rupee profit or not. But BofA Sec believes that it's already priced in right now.
Clearly, and obviously the stock has also run up. In fact, most of these new age companies from the record lows have moved up quite a bit. But the stock to focus really today was HUL as well as Tata Communications. And Tata Communications, talking about the stock, opened in the green, but we saw intraday dip of nearly 5%, ended up 2.5% lower. The management really aims to double their digital revenue over the next 3 to 5 financial years. In fact, the company is expecting strong growth in the data segment. But one concern because of which the stock was down today is the margins. They expect the margins to be in the 23-25% range, much lower than the street expectations. In fact, they do believe that because of the acquisitions that they have done, there could be some impact in the medium term with regards to margins, and probably this is one thing which the market did not like. If you look at Tata Communications over the last 1-2 months, the shares have run up nearly 200-250 rupees, and probably that margin guidance really did not augur well for the company, and probably investors moved to book profits in trade today. The other thing is that company is expecting a capex of nearly $300 million in FY24, and the net debt to EBITDA is expected to be nearly 2 times, but much higher than the current debt to EBITDA ratio of 1.3 times, probably factoring in the higher capex requirements and the acquisition cash requirements moving forward. So probably these are the 1 or 2 factors because of which there was profit taking in the shares of Tata Communications after a very strong run up in the last 1-2 months.
Well, but even if you look at the price to earnings, I think it's lower than the sector PE. So the stock is fairly, cheap when it compares to peers. Another stock on my radar is again from the Tata stable, Tata Elxsi. It has partnered with ISRO for the Gaganyaan mission, and that's why the stock was up somewhere around 2.5 to 3% in today's session. In fact, basically Tata Elxsi will be developing a module for the training of the crew recovery, team. So one of the key requirements of the project is to enable the safe recovery of the crew, and that should be done without much time lapse. So this is the training of that crew is what Tata Elxsi is developing. It's important because this is the first time that ISRO has outsourced such a project to an external partner, and this also marks Tata Elxsi's foray into the mechanical design for space.
Okay.
So this is a good project coming in for Tata Elxsi. Aside of that, it has also announced the launch of an innovation hub in Michigan. And the new center will be supporting electric vehicles as well as green mobility software and digital engineering for original equipment manufacturers as well. So this, Tata Elxsi actually provides design and technology services across industries, including EV, broadcast, automobiles, etc. So this innovation hub that it's announced is also pretty important going forward. But most analysts have a sell rating on the stock. They believe that the stock is fairly expensive compared to its peers. In fact, HDFC Securities says that the company's cash generation has been pretty weak, even though the profit has surged over the last 2 years.
Yeah.
So the future trajectory would be based on how much cash flow the company can generate going forward.
Clearly, and this is one stock to watch out for in the Tata Group. HUL, that is also one stock which is our focus radar. Macquarie has an outperform rating on this stock with a target of 3050. Now, if you look at HUL, yes, there is recovery which is expected in the rural markets. Monsoons have already hit the shores of Kerala and are expected to progress quite well after June 15th, especially in Mumbai and Maharashtra. Now, HUL, obviously there has been concerns because prices have been cut to really induce volume growth. And that is one segment which could be problematic. In fact, Macquarie believes that moderation in margins is expected as price cuts across laundry, soap and shampoo segment flow through. Obviously, on a sequential basis, cost inflation has also come down, but the price cuts have been steeper in order to boost demand. So let's see how HUL's strategy to cut prices and boost volume growth shapes up in the market, and we hope that the El Nino effect is quite limited. Obviously, the Met Department or the forecasters are expecting a slightly harsher El Nino to start middle of June and ending and lasting for the next few months or so, which could impact the overall patterns of rain. So, this is one concern point which is always there with FMCG companies and the consumption in the rural markets. But Macquarie is hopeful that the strategy will do well and the rural demand will pick up.
Right, Yatin, given the fact that ITC has also been firing on all cylinders, a lot of analysts are siding with ITC, even though HUL is a stock which the street has had a love affair with for quite some time. We'll have to see whether or not this love affair fades. But as it is, there is some signs of recovery in the rural market. So as you mentioned, El Nino is the deciding factor as to whether or not this love affair will continue going forward or
Correct.
not. Well, with that, we've come to the end of this edition of Closing Bell. If you have any comments to share with us, send them in to us on the comment section below. But for now, it's a goodbye from me and Yatin. I'll be back with the markets at 8:30 a.m. tomorrow morning, so don't forget to tune in. Thanks a lot for watching.